Hey guys, Scott from the Market Dominators Team here, and I want to take a moment today to talk about interest rate. If you're like a majority of Americans out there, when you go out to buy a home, you're going to get a mortgage. You're going to borrow money in order to buy the house. And every single month, you're going to make a payment and you're going to pay back your original balance that you took out plus extra, and that extra is called interest. So every loan has an interest rate attached to it. It's important to understand what the interest rate is and how it impacts your buying power, not just how much you're actually paying in interest, but what it can do to actually affect the purchase price of the home. And we'll talk about how that's playing into this competitive real estate market that we are in today and that we've been in for the last couple of years. I want to use a couple of real life examples from my own home purchase that I did just about 3 years ago at the end of 2018. I paid $272,500 for my home. Real number. I did a 5% down payment, which had me mortgaging about $258,000 roughly. Now, interest rates at the time were right about 5%. That was the going rate. 5.1 is what I got. That gave me a payment of $1,405 a month. Now that's just the principal and the interest. No taxes, insurance, nothing. Just the principal and interest, a hair over $1,400 a month. Now, 10 short months later, interest rates had been dropping. I paid attention, I noticed, and I decided to refinance my home. Now that $258,000 balance that I had, it went up a little bit when I refinanced because I had some closing costs that I had to roll in. But because my house had appreciated a little bit in just those 10 short months, I didn't have to do a down payment. I didn't have to make another down payment. So I ended up refinancing $267,750, but with no down payment and a rate almost 2 points lower at 3.375 from 5.1. My principal and interest was $1,183 a month. When you do that math, it's $222 a month less. Total every month savings in my pocket, right? Now that's huge. For a lot of people, that's a good chunk of change. But what's more important than really just the savings of the interest is how it affected my purchasing power and how that affects your purchasing power today. See, in this market that we've been in for several years of multiple offers, offering way over the asking price, and everybody just being so fixated on the price, they're forgetting about the interest and the cost that it gives them in order to get their mortgage. And when you zoom out and you look at the big picture, you realize that you've really got to take both into consideration. See, if I took that $222 a month savings and I extrapolated it out, I said, hey, if I had gotten this lower rate back when I first bought my home, what could I have gotten for $222 extra per month spread out over 30 years? Well, doing the math, I could have bought a home for $318,000. So basically, this interest rate, when I first bought my home, payment of $1,400 a month was $318,000. That's almost a $50,000 difference. So when you're looking to go out and buy a home, don't just look at the purchase price. Don't just get caught up in what the number is that you're paying for the home. Because right here, you can see that when I refinanced, it's really like I was getting a $318,000 home if you did the numbers the same with the interest being different. And that's huge. And that is really part of the reason that our prices have been really on the rise very rapidly. We've had very, very low interest rates. When I got this rate at the end of really near the end of 2019 when I refinanced, rates really stayed around this. They didn't really go back up. But then when COVID happened, rates dropped even lower. And because the rate was lower, it gave you even more buying power. If this rate was below 2.75 like people were getting at the beginning of 2020, oh my gosh, this would be even less. And I could afford even more home. And so when you're paying less in interest, you're able to offer more on the price of a home. And that's why we're seeing these very rapid appreciation of the home price, because people are saving on interest, so they're able to pay more. Now, if you think about it, let's use an extreme example. If this rate went up to 10%, right? This number would be a lot higher. I wouldn't be able to offer anywhere near that. I would probably be only able to offer 210,000 or 200,000 if my interest rate was 10%, right? So because of that, that would be depressing the price. It would be bringing the prices down. And there's a correlation between when rates are high, the price comes down, and when rates are low, the price of real estate is up. Because again, it gives you more buying power. So don't just look at the price. Don't get caught up in the price. Measure your interest rate, measure your cost, what it is that you actually qualify for a mortgage, and figure out what it's going to cost you over the course of the whole loan, and then make your educated decision based on that. If you're looking for more tips and tricks to succeed in this market, whether it's buying a home or selling a home, follow us here on the channel, hit the subscribe button, and we'll see you in the next video.